I don't know how to get this audio. I'm sitting here trying to talk to him. Yeah, it shows it. It shows it's picking up. I gotta wait until I can hear myself on the feedback. If you guys can hear me on Twitter, let me know you can hear me. Okay, I see Antonio can see it, but I'm not sure if you guys can hear me. I'm just waiting for someone to give me the okay, they can hear me. Thank you, John. Momentum trader. Thank you, guys. All right, so let's go back over here. I apologize. Like I said, I haven't been feeling well, so I'm gonna probably clear my throat too much and get on your nerves. But it's either that or I do it silently. All right, so I'm looking at the last hour trading here. It's Friday. Part of me wants to see that high stay intact simply because I gave you the low of the day and so far the high of the day. And the two contracts I had remaining, I peeled one off at 40.98.5, and I told you I was going to leave the other one on for 41.01.50, but the spread between the bid and ask never got offered to the point where I would allow my limit order to fill. And my stop, I told you on Twitter, would be 40.84.5, and either one would be, stopped out, whatever. And there's where my fill was on that last one being stopped out. Excuse me. This one here, I was doing some scalping, running back up into this fair value gap. I believe you should have that on this recording if I've done everything correct. But I was talking, I was talking my way through it, and I realized that I hadn't checked on the audio. So I'm learning as I go, folks. I'm sure it'll be better as we get through the year. All right, so does this want to do, there's a volume imbalance down here. It's Friday, short covering, 10 minutes after 3. There's two things down here I like. I like the volume imbalance and the fair value gap in here. I'm gonna yeah, in hindsight, I wish I wouldn't have taken my best friend out for dinner. Not to seem mean or anything, but this is annoying. He had a cold and gave it to me. That's why I'm complaining. All right, so we have, in my opinion, these highs up here, it's still too early to call it for the last hour because it could easily just pump up in there and run out to 102.50, 102.75. And I don't have anything in this as a long that I would favor. All right, so now we're pulling back into this range here. Let me get this order block here, and then we have a higher down close candle here. This is a propulsion block. So any retracement here should be kept at bay. It should not go below the midpoint of that candle. That's the rules for a propulsion block. Meaning that if this is going to rally, it should not go through halfway. And we'll just eyeball it and use that high here because it's approximately it. So let's watch this and study it. Okay, and we have a small little fair value gap here now. See how it came down and touched the top of this candle, the open? But my eye is here, and that right there. We don't want to see that. We don't want to see it go through it. It can touch it, but we don't want to see it go through that. Propulsion block, and these are the rules are in the core content. If it trades through it, then it's, in my opinion, probable cause for it to want to go down into this area here in this volume imbalance. You may hear my sons carrying on. I apologize. I'm a dad. So this last up close candle, that low right here, since we went below that propulsion block mean threshold, which is a barrier that we don't want to see occur. Trades up into it here, and then reprices lower into the fair value gap and the volume imbalance. So we have a small little area here as well, and this low here is sell side. So you can annotate that. Okay, trading up into the volume imbalance. We're below it, so it can trade up to the high end of it and actually go through this. Volume imbalances I'm a little bit more flexible with because they're such a small little range, and as I was teaching last night, the market likes to see a seamless delivery, meaning that if this is the level, it might overshoot a little bit. So how far can it overshoot to this candle's low? That's permissible. There's sell side below this low, and the buy side imbalance, sell side inefficiency that's between this candle's high, that candle's low. I will want to see if it tries to get down below this low and fill in all of this and reprice to that low. Now, assuming that it gets overzealous and goes through this area, we're repricing back to the volume imbalance here. We have relative equal lows here. Sell side would be below that. Now, when you have like this low here and this low here, they're essentially the same. So you have this low at 85 and a quarter, and this low here comes in at 85 and a quarter. And if there's a small little wick over here just beyond it, I'm not going to outline it with this being the level. I would just simply look for that. Okay, as I mentioned a little bit ago, if it were to go back up and overshoot it, this is permissible. This coming all the way back up to midpoint of this, that's reasonable. It's rare that it comes all the way back up, as I was mentioning last night with the balanced price range. So it would need to immediately reject this and go lower if it's going to go lower. Let me get this out of the way, sorry. See, these are all the things that I'm looking at price, and does it do these things? These are signatures and price action that I'm looking for to either confirm or negate an idea that I'm watching or studying, maybe for an entry or managing an open position. Or in this case, tape reading with all of you, which is just simply observing price action, annotating, making reference to certain things that would otherwise be unnoticed by you. That's what we want to see down into that fair value gap here. Now watch consequent encroachment, which is the midpoint of the gap. It's at 87.50. Yeah. So 87.50 and 86.75 respectively. So far it's only hit the top of the fair value gap. The cards. Shuffling the cards. So I'm not really looking for anything monumental in terms of price movement this last hour. It's Friday. We're just moving in between a dealing range between this low and this high. We made an attempt to run up and challenge this old high, and this fair value gap and buy side liquidity pool resting above the short-term high was enough, and the bodies are respecting the consequent encroachment of that midpoint, and we bumped it one more time in here. So all I'm doing is small little micro market structure observations with you. Now watch this one in here, because that might be where we're gravitating to. And be mindful of the volume imbalance. One of the things that you're going to have is a source of confusion, frustration, is knowing which PD arrays to be more flexible with. Come on. There we are. And one of those are my volume imbalance. So I allow price to move through it back and forth, and then come back and use it again as a support or resistance level. The fair value gaps, I'm not that loose with. Like, I'm demanding them to do specific things. Now, if they're broken and price goes away from them and comes back and goes back above them or below them, then it can be reclaimed. But back and forth type price movement like we're seeing here, that's, for me, and what I've grown to trust with my volume imbalance, which is again a separation between two candles bodies, but the wicks can touch or overlap, that's fine. The identification of that in price action. Let me put this in here too, because I saw a couple people mention it. They're saying that their broker feed or their broker doesn't show, or sometimes if they're looking at the micro account or micro contract, first, like this is a mini, and the micro MES, sometimes it doesn't show the volume imbalances on there. I'm not aware of that because I don't really watch the MES, but the way you would combat that is simply just watch the price action of mini and trade with that insight using what you see on your EMS chart. But I'm comfortable allowing price to, here's the mean threshold, I'm sorry, the consequent encroachment of the fair value gap here. So now our attention goes to the right below here, and this specifically so we have this buy side imbalance, sell side inefficiency, the lower end of it here, sell side, and we have an order block here. So let's see if we get the price to want to dig down deeper a little bit. Volume imbalance, volume imbalance. So it can reprice back up into this area here, but it would be better if it didn't, because pushing back up into that, if it launches through it, then we're going into this area here. So you're probably saying, what's the benefit of this? Well, what's the benefit of watching price action today? It was rather lethargic, choppy in certain times, and we were covering it in Twitter. And then ultimately, I gave a 10-minute filter. I was like, okay, I'm going to give it 10 minutes and see what it does. And then it gave me something to work with. And I outlined it, walked you through it, and I'm sure some of you did what you weren't supposed to do and trade it. And I called the high at 41.0150, which at this moment still is in place as the daily high. And this morning, really early before the New York session, I mentioned the low, right to the tick. So both high and low have been shared with you. Goober on Twitter was telling me, oh, but why'd you say it could go? Because anytime a Fed speaker, anybody from the Fed is talking, it can create wild price action. And when you're new to trading, you don't understand that. So you have to make available allowances for you being inaccurate, or traditional expectations or rules go out the window when Fed gets involved. So the Fed effect is, all the rules go out the window, and you got to prepare for that. So the low I called this morning, and the high that I have here, when a Fed speaker or Fed representative is jawboning and talking, their words are going to be utilized as a smokescreen for price to do what it's going to do. But you're told it's the market reacting to what they're saying. And I'm sorry, I'm not a subscriber to that view. I probably should put these cards down, because invariably someone's going to hear me shuffling and they're going to think either I'm doing something vulgar or inappropriate, but it's this me shuffling. I'm usually doing this with cards in hand while I'm watching price, because it's just I gotta keep my hands busy doing something. I just can't be standing in front of my screens. So I practice shuffles and such, but I want to see if we can stay under this volume imbalance. But look how spotty price is right now. And meaning, what do I mean by spotty? You have volume imbalances in here, 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 and the one over here. So it makes it difficult to get a real smooth, like obvious run to this price level, react and go lower, or run to this price level, react and go higher. So it can go back and forth because it's referring to all of these specific PD arrays, which makes reading price and taking a trade much more difficult to trust. And where would you place your stop loss? Because it can bang around in here and then ultimately run on one of them as its baseline premise, with supporting it as the PD array or the multiplier for price to start moving away from. It's hard to get a read on that when there's multiple ones like that. So when I say market's spotty, that's what I mean by it, as multiple volume imbalances. It's very porous, put it that way. And when there's porous pockets in price, it's going to want to spend more time in there rebalancing that. And the way you rebalance is you reprice to it, you leave it, go back into it, and fail, and go the other direction. And since there's multiple ones, it means you're going to see it go back and forth, back and forth. So we're up inside that fair value gap. Odds of equal highs here. Now, if we were to rally and come back down and find some support here, then I think, because of time being 3:30 now, we might see a macro run us up into these highs here and take out the buy side that's resting over here. So one of two things are going to happen if that's exactly what's going to unfold, and I'm not 100% certain it's going to do that, but I'll stick with that narrative here. If it goes above it, finds the support here, then it would look to rally. Otherwise, it's going to rip right on through and not even look back at it. Okay, so now, because we have this gap here, the one that's shaded, and we have a swing high, we now have technically, quote unquote, a market structure shift. After trading into a discount fair value gap, after taking sell side here with this drop down, we're bumping up against this fair value gap, and we would want to see price stay wanting to go higher. This fair value gap, you have to be mindful of that. So you just can't take a long here and put your stop loss there, because you have this inefficiency, and it can come back down into that. So your stop would have to be down here around 89, 89.25. So we've had a really perfect delivery to the low end of the fair value gap here. And we'll see if it wants to rally up and start spooling higher. This is our bearish order block. We don't even want to see this act as a speed bump, meaning it shouldn't be, it wouldn't be ideal for it to hit this and, like, you know, be slowed down at all. We would want to see it go through that, and more specifically, not just enter it, but go right through the midpoint of the candle, which is mean threshold. So when I'm watching this area like this, and I'm thinking if it's going to reach for buy side or attack the daily high going into the close on a Friday, if I have an order block like this, I'm watching price and I want to see it needs to quickly go into the candle's body and go right through the midpoint, which is mean threshold. That's the qualification. That's the little nudge that I'm on side. I'm confident that it's going to do what I'm expecting it to do if it runs quickly through the midpoint of the order block. If it does a run up here and just bounces away from it and just meanders around, that's not as ideal. It means that it could consolidate or it could reverse entirely and come back against the idea. So I'll annotate the mean threshold on this candle in the event if we get a run. So what is that? 95.25. So we would want to see it rip into 95.25 aggressively and run right through it. If it's going to rally and go for the buy side, that's how you know to trust it. How do you know, ICT, to trust these moves, yada, yada, yada? And it's because of that. It's tearing into the order block and not respecting the mean threshold, which is this little red level here. You folks are getting spoiled this week, all these sessions of the good old ICT. All right, to see what it's doing here, this is what I don't want to see. This is what I just explained to you. We don't want to see it go into the order block and fail to run up into mean threshold and tear through it. What is it doing? It's retracing back down into the fair value gap. That is something that you don't want to see, and it takes much more for it to turn around and go higher from this point. And if you're in a trade and your stop's at 89, as we indicated down here because we have this fair value gap, it can be a little unnerving for you when it digs that back down into that fair value gap. So we want to see this candle here or the very next one, because it's 52 seconds before the turn of the new candle. We want to see the next candle when it opens immediately run higher. Not even mess around, just rip higher. Does it tear through mean threshold? We don't want to see it respected at all. See, that's not what we want to see. We don't want to see that. So what you're watching is you don't want to see that candle turn on you. It's got to stay above its low. Dig through. Okay, so now we're okay. Now watch the buy side over here. And much like we just described on the order block here, we want to see the same event here for this fair value gap. So while I don't have this on my charts, my eyes going to these points over here, and I'm saying, okay, I know that price is roughly here at 40.97 and a half. I want to see it rip through 47.97 rather, 40.97, this price here, essentially midpoint or consequent encroachment of the gap that is between This candle's low and this candle's high with this one little down close candle. All right, so we would want to see large range expansion. Usually when you see me doing my recorded trades, I'll type out and say, I want to see speed and distance, or sharp decline if I'm looking for it to be bearish. I want to see big range up, green, big up candles. That's what I'm saying. Like, I want to see large range green up close candles. You see how fast we went right to the consequent encouragement? That's that mid-level right here. When I see that, I feel like that's like a confirmation that you would be on side and I'm on side if I'm expecting it. So I would reasonably expect to see it to go through here. Now if it goes through here, we want to see it expand up with a lot of velocity and speed, so that way you can dig into this level over here and take out that high, which in my heart I wish I would just not see it taken out, because 4101.50, even though my last contract didn't get a fill because the spread, the high and the low was called to you in advance today. The fairy tale stuff that they say can't be done. So you can see it's already moved about 5 handles or so. What's the open on that? Or close rather. 9250, and there's your 5 handles, and it's tearing through the fair value gap, coming back, touching it. Watch the low. It can come back and touch that. It's fine. If it comes outside the fair value gap, watch the consequent encouragement of this wick. That's what my eyes go into. When I'm looking at it, I'm watching, does it support it? I need 3 PD arrays. 3 PD arrays. Once I see 3 of them break, then I'm gonna look to collapse the trade or take some of the trade off. In this case, nothing here is problematic. It should have an expansion here on this candle. Rip through that buy side liquidity and then dig into that 4100. It's pretty neat how it's consistent, isn't it? It's fun. And this has always been available to you. You just haven't been doing it. And when you do this, you learn what it is that I'm doing. And I've been doing this for 30 years, so obviously I'm going to be better at it. But in the beginning, you got to get past that uncomfortable not knowing what you're doing. And you observe things, and you record things, and does these things repeat over and over and over again. So we had buy side taken here, and that would have been a partial for you. So buying the fair value gap, as I mentioned here, we're going to use the top of the fair value gap, which would be the equivalent of this candle's close. I don't want to say that you would have got filled down here because that's not practical. But the closing price here is essentially the same thing as the high of that fair value gap. So 4092.50. So 7 handles from here to here, running out buy side. That's not a bad move. That's a bread and butter type setup. It's real easy. Those things happen multiple times, in a day. And you could roll your stop to +1 and just see if you have a run up into new highs on the day. But you don't want to be limiting how much you're going to get, because when it gets close to this 345, 350 time window, the macro in the last hour can start really sending this thing higher and run out through here and then keep going a little bit more. So you don't want to ever shortchange yourself in that opportunity. So you could have a limit order to take something off at the new high, you know, like 101.0175 or 4102 even, and then have a runner to see if you can get any kind of additional expansion should it materialize. We don't know because I mean this is a bull. I'm sorry, buy side liquidity pool that has been purged already. Here, volume and balance. Watch that right in here. The consequent encroachment of the wick here. So about midpoint. Draw that out in time, and you're watching. Does the price touch it? And does it, if it does touch it, does it disrespect it and go right on through it, or does it fail to even go to it and resume going higher? That's what I'm considering while I'm watching price. I'm not looking at indicators. I'm not looking at moving average crossovers. I'm not looking at supply and demand zones. I'm reading very specific algorithmic price levels that are going to key up on what you would expect in support and resistance. These things do offer that. If you're watching this video live and you watch me outline this 7-handle run here, do me a favor and give me a thumbs up. I was watching, because I'm doing this for free, and one of the things that I would like to see you do is, you know, support the live streams. You're not paying for them, but your payment to me for appreciation would be the thumbs up. The more you inspire me to do that, the more likely I'll do more of these. Obviously, you can see it's no real effort on my part. I just didn't want to do them before because it's a pet peeve of mine. Every single time we meet, price seems to know how far I can go on its leash before we close our session out. And that, my friends, is fun. That's what we're looking for. Notice how price went down into this wick here. Consequent encroachment. Beautiful. Redelivery. Buy side. So you notice probably when I'm looking at a run, every time it makes a new high, I always annotate it like this, and I'll take a partial when it hits there. You would be doing that too. So this is called running down equity. So right in here. Now, because we've had one high taken here, and then this high took out that high, we don't want to see any kind of reversal. So this low here needs to stay in place. We don't want to see any of that coming back on that, because then it's problematic, and we don't want to see it basically. And now we want to see an energetic big run up into like 4104, 4105. Big candles pushing really hard because there's a lot of orders that are resting up here that are layered. That means they're like all up in here. The books will tell you to put it right above the high, but some other traders and fund traders will think, okay, well, let me just go a little bit deeper than that, and I'll be really protected. And that's why when you see in the later parts of the day, the old intraday highs and lows, they'll get really ran out because they're seeking the liquidity of the funds. And funds have their stops, not just one tick or 1 point above it. It's several handles above it, as much as 10. I know, it's fun. Oh, ICT, why didn't you do this sooner? Because all of this is your responsibility. This is the work that you're supposed to be putting in. But I would have been able to quit my job back in 2016. You still can, but you're going to have to do it on your own effort, not following what I'm talking about. Anybody can follow what I'm saying. That's not skill. I'm just showing you what it looks like, showing you the principles and what you would be doing when we're not doing it like this. Now I would want to see it rip higher here and respect the down close candle here, which is a bullish order block. Now I want to see a big run up, real sudden, boom, boom, like two big bullish candles rip into that 41.04 level, 41.05. What do we have there? Another wick. See that? Does it support that idea of holding it at bay, or does it dig through it and completely go back down into the range of this wick? Because the consequent encroachment of that wick is here. So it can come back to here, but we don't want to see it completely wash out that candle. I'd be lying if I said if I didn't want to see it crash here. I don't want to see my 41.01.50 high breached, but it's probably going to happen. So that's okay. It's not the first time I did the daily high and low, and it's probably not going to be the last time. It's real hard to argue about the markets being algorithmic now, isn't it? Controlled, if you will, after seeing a week like this. How on earth does he do this? Where does he get these toys? From another dimension. All right, so here's our last chance to see it rip through. Big caffeine bar, big, huge caffeine bar. Just push, 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 real big. A little bit more than that. So you've seen the 41.01.5 levels breached. So anybody that would have been having a stop loss beyond where mine was, and they were holding on to it, there's your fill on that. I'm just not comfortable with having all that retracement all that time. There's so many other trades, as you can see here. I've been outlining here live with you. Remember, we're looking for 41.04, 41.05, layered, fund, open float. Got 30 more seconds. Last 10 minutes of trading. I'm probably annoying some of you. What is that noise? What's he doing? I'm anxious because I've been in furniture stores all day with my wife. Oh, there you go. There's your algorithm. You got as far as, what's that, 41.03 and even? What's the high on that? Yeah, 4103.00. Still could flip here. It would have been better had we started the run into the old intraday high at 41.0150. If it was doing that right when we got to 10 of 4, if it would have done that, then we would have seen that blistering big run up and pop through that 41.04, 41.05 level, and maybe even higher than that. So at this point, you would be wanting to take just about everything off and just see if you can get another run on one singular candle. I'm sorry, not candle, but one contract. But this already is not in my favor for continuation. So what you do with the algorithm in the last couple minutes of trading, if you identify a liquidity pool that is likely to be ran out, which is what we were watching today, we were looking for this here. If it runs through it before 10 minutes of, then the macro will run through it aggressively and reach for liquidity that's resting above the high. But since we hit it ahead of and went through it ahead of, here, you see what time it is? It's 3:48. That means it's already delivered running through the high here. So it's going to have a small little flurry. It might go up here, but then the macro will dig back into the daily range. Why? Why should it do that? In an up close day, rarely, and it's not a trending day, but rarely do you see the candle close on the high, unless it's a trending day. Typically what will happen is it creates the intraday high of the day, then it pulls away from that high and closes near the high. So it won't be on the highs, it'll be off the high. So that's what that market on close macro is doing. Fair value gap right there, bumping up into the 41.75 level. If I was making the market, I would intervene here and rip it higher and go right into 4109. But that's just an ICT being an ICT. Yeah, she had me in all these stupid furniture stores. I can't stand looking at, like, I didn't need to be there. I mean, she could have went out there and looked around for all that stuff. What do you think about this? You know, whatever answer you give your wife, you know, if you're honest, you don't want the answer. And you don't want to lie and say, oh, yeah, it's great, honey, because then you have to buy it and live with it. So it was just miserable. Here's our 4104. Let's see if we can dig into 4105. Come on. Give me 40. Give me 4105 and then 4109. Rip up there. Just because I'm asking nicely. Technically I'm satisfied because it did give me the 4104, which is what we were talking about. We're down in here. So that is a 10 handle run as well. Better than. In a very comforting Bob Ross tone, ICT has explained it in detail, what it should do, what it shouldn't do. If the market was not algorithmic, if there is no algorithm, I would not be able to do and explain what I just gave you. What logic am I using? Exactly. The more you know. I don't know if I'm going to be doing a shotgun Saturday tomorrow. I put a lot of time in with you this week, and my youngest son didn't see much of me this week, so I'm going to try to spend some dead time with him. Because Twitter spaces tend to be a big erosion of my time. They easily become 4-hour long rants. And I know some of you have been thinking, oh, he's really going to have a rant this week after seeing what you saw. No, you just seen what I do every week. But I have to be more equitable with my time. See that small little fair value gap there? one of the things also I wanted to mention while I'm doing this. Now here, since we went back below it and we had a run on the highs, look at this as a potential resistance. Does it hit this, respect it, and reject and go down here and here? Or does it ramp up and one more time run into the highs? It's not for a trade entry. Remember, you would be managing and holding on to what? One contract. Seeing, does it give us, which is how I would be managing it. I'd be looking for any potential to get to that 4109 level. So did it respect that fair value gap as resistance? Not that you could tell here. So it would allow me to feel still comfortable holding it to see if it can get into a higher high. There's levels and rules to all this. It's not easy, I know. But over time you'll get them. And one of the things that I talk about and teach live and point out what it should do, what it shouldn't do, it'll resonate with you. It'll be, that's the one, that makes so much sense to me. I'm going to use that. And you won't care whatever I talk about outside of that one. And that's what your model will be based on. All right, so now because we went above that fair value gap, you want to be measuring, does it offer support now? Does it keep price from wanting to go back down through it? Because if it goes back down through it, then we're probably done for the day and the highs in place at 4104. In that event, you would protect your stop loss. That would be somewhere down here. And you would close your trade. Otherwise, if it doesn't go through the fair value gap and it's above it, you give it a chance to run up in there and see if you can make a higher high. But you want to be closing it right before 4 o'clock. Look at the time. I'd be done. I'd close the trade here. And I'd be content with that. Now, it can trade, obviously, past 4 o'clock. You want to venture into that time? It's your business. That's your prerogative. I just don't. See how we went through the fair value gap here? So even though I was initially right with the 4101.50 level and nailed it to the tick and reversed, I sat with you live and I told you another level that I thought would be significant for a daily high, 4104, as much as 4105. And if we were going to run through, I would have really appreciated seeing 4109. That's how I would have traded it. I would have looked for that type of run. As you can see here, that didn't manifest, but 4104 did. And when you would journal that and annotate your chart, you would put that in there. I'm pleased. I was so satisfied seeing that my analysis called for 4104.00 as a high. And then you take your little annotation and you dress up your chart, drop it on there, and then all your appreciation and self-love you pour into your journals and your chart annotations. You don't put anything toxic into it. You don't put anything, I got stopped out 2 times today and blah, blah, blah. You don't need to add all that stuff with misery because your subconscious is going to remember that. So I do think that's going to be it for our time this week. I had fun. I spent a lot of time with you all, so I'm going to try to use this weekend to rest. I don't, like I said, I don't foresee myself doing the Twitter space this weekend. Usually Saturday, Shotgun Saturday where I sit down with y'all and talk on Twitter. I'm going to use this weekend to rest. I'll send you some pre-market charts on Sunday evening before the market opens. I'm not going to do any video work this weekend. And one of the things also I've learned to quite enjoy is when I'm doing the live streams like this, invariably I'm going to have something in here I wish I could take out. My nervous, compulsive, OCD, flaring of certain things that I wish I would have said, or if I have to correct something I miscalled, like sometimes I'll say this breaker or this consequent encouragement instead of mean threshold, because my mind's going 100 miles an hour while I'm watching real-time price, and I'm also anticipating what questions you may be having looking at price while we're doing it live. So one of the things I like about doing the live stream is it's one and done, whereas I'm so high strung about making sure that the videos are how I want them. This way it's kind of like it's done. It isn't perfect, which I don't like that, but it communicates everything that's necessary, and it's very economical with my time, and I think for all of you, because you get it immediately. So I was trying to tell my wife, I said to her, majority of my time is production, edit, review, make sure everything's the way I want it, and then I gotta compress it, and then I gotta wait for YouTube to do its thing with it. Whereas here, all I gotta do is just start the whole process, and then when I end the stream, I'm done. There's nothing to it. So I think what's going to happen is that we're going to end up evolving into just doing this every day. I know some of you are like, yes, yes. I'm getting funded now, Jack. That's what I wanted to say. I mentioned earlier, but I didn't finish the thought, or at least I don't remember saying everything to completion. But I asked all of you that were not following my instructions, if you're taking live trades based on what I'm calling in Twitter or calling in the live streams, regardless of how accurate it is, if you're taking trades, I don't want to know. I don't want to know that, because it builds up anxiety for me, because I don't want to do anything to hurt any of you. And invariably, because I am human, like today, I have small stop loss. It got hit, and it's not a big thing. Immediately, you saw me call out the market, and we had the big run today. So, and here's another one in the afternoon. The pressure that you put on me as your mentor when I've asked you not to do these things, share that stuff with your friends if you want to do it, but don't add my handle on Twitter, because I scroll through everything, and I understand that you're trying to show me appreciation, but I've asked you not to do that, just like I don't want to be called the goat or a king. I tell you those things because I want you to respect the fact that I'm asking you not to do it. It's not an encouragement to keep doing it. I find it very disrespectful, and it offends me. So if you appreciate what it is I do, the way you show that appreciation is just be respectful, say thank you. If you made money, well done. But I don't want to know about it, because it just reminds me that every time I'm saying something, you're all going to do something with a live account and potentially open yourself up to risk. And the whole point of this entire year is for you to grow and trust your own analysis, not I'm going to piggyback while I can because he's pretty consistent. You're missing the observations that are there without having the money associated to laboratory experiments that we're doing. So I haven't looked at Twitter, so if you've tweeted that you made money on this afternoon session together, please delete your tweet. I don't want to see it. I'll be in bed tonight laying there falling asleep going through tweets, and I'll see it, and it's just going to be a source of anxiety for me. So, and I know you're probably thinking, why should I be anxious? It's the dad in me. I don't want to see any of you do something to hurt yourself prematurely and then scare yourself out of doing it. the right way. So that's that. And I think we're going to close it here. So enjoy your weekend. Have a good one. Relax. And I promised Tom Hugard that I was going to give a review on his book. So I'll just do it briefly here. I listened to his audiobook over the span of 3 days. It's only like 6 hours or something like that. 6.5 hours, a little less than 7 hours. I enjoyed it. I thought it was a good listen. And if you haven't given it a consideration, perhaps you should do that. I'm not getting anything for it. I told him I was going to give a fair review, and if I didn't like it, I'd say it, but I would do so respectfully. But I enjoyed it. I told him, I said, I enjoyed your book. I had it through audiobook, which is the way I can go through. I do about 2 or 3 books a week through audiobook. And his was a very easy read. It was not something that would have been challenging for any of you. And in some parts, I felt that there were some funny parts in there, and there's some things that were very, very true that don't really get considered. And I don't want to steal the thunder and talk about what they are, because then it defeats the whole purpose of you listening to his book. He put the time and effort into making it and producing it, so you should hear it from him, or at least the narrator that did his audiobook, which I think did a pretty good job. Usually, some of the audiobooks that I've purchased, not necessarily trade related, but and you're probably asking, what do you listen to? Fiction, historical things, documentary type things. It's not always trading, but with 2,000 trading books, you don't need to have any more trading books. But what was interesting about this book is it was about how a trader thinks, a trader, and his opinion about what we as traders shouldn't expect to encounter, how to deal with it, and how he dealt with it. And I find that fascinating. Like, I absolutely find that fascinating. To me, that's more important than understanding how a trader trades with his techniques or skill set with whatever things that he uses in the chart. Because that, to me, is not of any importance. How they conduct themselves, how they manage their thought process, their emotions, their fear, their greed, their anxiety, their performance, and the performance anxiety that comes by way of doing what we do here. And I thought it was a good book. If it were a question of should you go out and buy it right now, I don't think it's a you got to go out and buy it right now book, but I think you should have it. And I don't think there's any book out there that you need to go out there right now and buy. But if you can afford to get it, get it. The audiobook was good. I didn't sit and read it, and I don't really read so much anymore because my eyes aren't as strong as they were as a young man, and I try to protect them as much as I can because I have to do what you see me do with you. So audiobooks are better. It's more efficient. I could be driving and listen to it. I could be walking the dogs or exercising, whatever I'm doing. I could be digesting a novel or a book over a course of a couple of days. So well done, Tom. And I think that's going to be it. I will touch base with you, obviously, on Sunday evening, probably sometime between 3 o'clock and 4. I'll start uploading some charts with some annotations and such. And I know I mentioned in closing, I know this tends to go on and on and on, but I'm saying this and I'm out of here. I mentioned how I was going to post on TradingView, and I just don't want to have another thing to manage. Like, I don't want to be doing that. So if I do any charts, it'll just be uploaded to Twitter, and that way you can see it. I mean, it's the same thing as being on TradingView anyway. I just don't want to be obligated to do something in addition to what I'm already doing, which in my opinion is mentorship level. What I was doing. Well, I'm actually doing more than that now because I'm doing the live streams. I'm talking to you on Twitter, spending the entire afternoon. wonderfully distracting myself from all the rich Corinthian leather. I don't want to. I don't want to be trapped anywhere, in stores with my wife in a shopping dilemma. So I'm gonna probably start talking to you if that ever happens again. So you'll get again much more than you expected from this year if she's successful in taking me out into stores again. That's why you didn't get any kind of charts. You didn't get any kind of anything shared with you. No real recordings of anything because everything I was giving you today was right on my phone, which was not easy. But that's it. Enjoy your weekend. I had fun. Hope you had fun as well. If you learned something this week, let me know in Twitter what you learned, what you found insightful, and what you're excited about going forward into the rest of this year.